Welcome back. Now, the local retail sector has had an upbeat 2024, posting gains close to 33%, surpassing the all share that recorded a 9.4% rise last year. Joining me as we reflect on some of the factors boosting the sector is Sasfin Wealth's Senior Equity Analyst, Alec Abraham. Alec, thanks so much for your time today. Now, it's really been a tale of two halves for the retail sector. I guess this applies to most sectors in the country for 2024, considering that sentiment only lifted post the national election. As we get started, just take us through, just recap that performance, the industry's performance in particular.
Right, thanks for having me on your show, Ntaling, and all the best for the new year. The factors, there's six factors, I call them the Pick Six, that led to a revival of the economy in many ways and consumer in the second half of the year. The first of those was the almost 15% drop in the petrol price since its peak in May. We've had the cessation of load shedding since mid-May as well, miraculously. We had the boost of the sentiment boost of the June election. Since August, we've seen a 0.5 percentage point drop in the interest rate, and we also saw a very welcome return to real wage growth in the third quarter of last year. And then finally, we had the dopamine rush of the withdrawals from the two-pot pension system just in time for Black Friday and Christmas. So those factors all really led to better sentiment for the consumer, but also more money in his pocket.
Yeah.
And we've certainly seen that in the retail sales numbers. As you mentioned, in the first half of the year, retail sales were practically flat. And in the second 6 months of the year, retail sales were up on average 3.5%, 3.3% per month, year on year. So we certainly saw an uptick in spending because of that additional spending power that consumers had.
Now, with that being said, is the rally we're seeing, is this upbeat mood sustainable, considering that some of the factors that you've mentioned can change at a snap of a finger? I mean, petrol prices could go up again. The SARB could stop cutting rates. There's so much at play.
Yes, no, you're quite correct there. I think also one of the wild cards that we've got now is the re-election of Donald Trump.
Yeah.
If he goes through with his tariffs on China, you may see the renminbi weaken. And very often what we see when the renminbi weakens is other emerging market currencies also weaken, like the South African rand. That immediately puts pressure and may lead to higher fuel prices or something like that. So there certainly are setbacks that could befall our economy if we don't see that will prevent the cyclical upturn from continuing. The other big issue, though, and probably the main issue, is the fact that if we don't see tangible improvements from the Government of National Unity in policy that lead to improvements on the ground, giving people jobs, higher salaries, if we don't see that coming through, I think the cyclical upturn is going to peter out.
Would you say, though, that the worst is over and that we will see a consumer that is starting to purchase more? Looking at some of those retail sales prints, you do start seeing the consumer purchasing bigger items like your furniture and whatnot. Do you think the worst is over?
I think the worst is over, but we're still quite vulnerable. So sentiment might be better, and I think that's a very, very good start. But the reality is, if you look at the valuations now of the retail companies, particularly the apparel companies, they've really reacted to the positive sentiment. The share prices are up enormously. You've got Mr. Price was up 93% for the year, Foschini up 46%. Pepco up 50%, Truworths up 46%. So the valuations have already reacted to the positive sentiment. If we don't see the earnings catch up, it's unlikely that we're going to see further improvement in the share price in 2025. We need to see those earnings catch up to the valuations.
And I guess that's also what's just playing out in the economy, Alec. You look at sentiment is really upbeat. You look at business confidence. You look at consumer confidence. Everything is going up, but we're not seeing the growth, the numbers come through on that front. Let's take a look at those clothing retailers. You touched on Mr. Price, TFG, Pepcore. There's also Woolies in that field as well. There have been issues around competition for these retailers in particular, where we've seen the likes of Shein and Temu just kind of gain more market share. Let's just talk about that for a bit, and whether there's a fair playing field for our local retailers when it comes to these international competitors.
Look, I think it's a fairer playing field now that we've got the tariff on the imports are from places like Shein and Temu, because before that it was unfair. You know, if you're playing by the rules in one country, you're respecting workers' rights, you're respecting the environment, but you're not doing that in another country and you can afford to have lower prices, that's unfair. So while I'm not a proponent generally for tariffs, I think it's actually a very good thing that they've imposed that in South Africa on those purchases. The other important thing I think you need to bear in mind is it's all good and well to have an online store only. But at the end of the day, people want to, particularly when you're buying clothes, you want to feel the material, you want to try it on. And so what we've seen internationally and in South Africa, that an omni-channel strategy where you've got a good online presence where people can go and see your ranges, price the ranges and compare various retailers, but then have stores, and people tend to come into the store to buy the merchandise, or they'll buy it online and collect in store. So that omni-channel approach has been shown to be a much better approach than a pure online store. So I think from that point of view, while Temu and Shein do offer some competition to our local retailers, I think the fact that they've got a physical footprint and a good-looking physical footprint, I think stands them in very good stead.
I can tell you for free, Alec, that those tariffs have hit me very, very hard.
Don't shop at Truworths, don't shop at Temu.
Support local. That's what I'm going to do.
Yes.
Alec, thanks so much for joining us and just taking us through those insights playing out in the retail sector. That was Alec Abraham from Sasfin Wealth.